100 moving higher whilst the S&P 500 remained relatively unchanged and the Dow Jones 30 moving lower, as market fears of the US defaulting on its debt had alleviated, following progress by US lawmakers to resolve the debt ceiling standoff. In this report, we aim to present the recent fundamental and economic news releases that impacted the US stock markets. Look ahead at the upcoming events that could affect their performance. Last week, the Nasdaq 100 gained ground whilst the Dow Jones 30 declined and the S&P 500 remained relatively unchanged, as the probability of a US default decreases. Following the high-level talks between US lawmakers, the risk of the US defaulting on its debt has eased, as post-meeting statements indicated progress and contained strong wording that the US would not be allowed to default, diffusing excess worries in the equities markets. Aiding to the fall of Dow Jones 30 index yesterday was Home Depot, whose earnings releases caused waves in the markets after posting its biggest revenue miss in more than 2 decades. The earnings result dealt a 2% blow to its stock's price, as in the forward outlook the company expects sales to decline between roughly 2% and 5% for the entirety of 2023. Painting a gloomy picture for the home improvement retail giant and the probability that the Fed is likely to continue hiking rates. Traders fear that consumer staples companies may be amongst the first to feel the negative implication of tight economic conditions stemming from restrictive monetary policy practices. However, there is an outlier amongst the equities market, being the Nasdaq 100, which is currently on a 4-week winning streak, defining expectations. This could be attributed to the AI-generated hype around companies, albeit of which some were just remotely connected to the development of artificial intelligence, hence propping up their stocks like helium balloons that are just waiting to pop once in reality sets in 2000's dot-com bubble fashion. In addition, since the majority of companies have already posted their earnings for Q1, it is likely that the US equities markets are primarily driven by external factors such as the FX market, where a strengthening dollar has taken the spotlight away, as the banking fears subside and progress is made on raising debt ceiling in order to avoid a US default. BAIDU, the Chinese behemoth, announced its quarter earnings report on Tuesday, beating revenue and earnings estimates as market attention turns back towards the Chinese economy's rebound following its reopening in November. The better-than-anticipated earnings report is indicative of a continued confidence by investors in the Chinese equities market, which is still stronger than its American counterparts, as the latest growth data indicated that the economy grew by 4.4% in the first quarter. In addition, the company stated that certain elements of its businesses are experiencing demand approximating pre-pandemic levels, potentially providing investors with a greater-than-expected optimistic outlook. Furthermore, BAIDU has also capitalized on the recent AI frenzy that has taken the world by the reins and has announced that it's currently waiting for its ChatGPT alternative Ernie bot to receive regulatory approval from responsible Chinese authorities. In the event the BAIDU's Ernie bot gains approval by state regulators, it would allow the search engine Goliath to tap into a booming tech industry, given that the recent tensions between China and the US would most likely make it more difficult for foreign AI companies to enter the Chinese markets. Thank you for watching.